Hi, and welcome back again to Option Optics, seeing what others don't. We'll be taking a look at a put calendar opportunity in Apple AAPL, where an overbought and overvalued Apple with very cheap options sets up ideally for a put calendar spread trade. And as always, we are powered by Pilot AI. So we always like to take a fusion approach here, looking at the fundamentals, looking at the technicals, and most importantly, looking at implied volatility. So let's jump in and take a look. First of all, here's the fundamentals. You can see that price to sales on Apple is now over 10 times, which is the first time in Apple's history. So certainly Apple is very expensive, the most expensive it has ever been on a price to sales basis. PE also approaching the highest level we have ever seen. You can see PE now at over 38 times. Last 5 years or 10 years, only twice as it approached these levels. Both times, we'll see in a second, marked significant short-term tops in the stock. You can see that was on September 26th, right, when it approached and hit 38 times, right, going back to December 27th of 2024, the highest level ever at 42 times, right? And then December of 2020 during the COVID crisis, right, at 40 times. And of course, interest rates were much lower back then, which support higher multiples. So certainly Apple getting to extreme valuations on both a price to earnings basis and certainly on price to sales at over 10 times. We can also take a look, as we always like to, at the technicals, right? So here's Apple's chart, right? You can see the stock up yet again today, has been up basically 8 days in a row now, trading at a big premium to the 20-day moving average. You can see 9-day RSI now over 80, right, which is the first time we've really seen that since going back to just a couple times that marked significant tops in the stock as well. We're seeing MACD reaching an extreme. Certainly MACD has calmed down generally across the market. Bollinger percent B over 100 times, over 100 I should say, which is also an extreme. So everything on the technical side certainly pointing to Apple getting a little bit overbought here, to say the least. And IV, as we can see here at trough multiples, we'll take a look at IV on a more granular basis. Here's the 60-day IV pulling it off. You can see trading at basically the lowest level since September, right, which marked a short-term top in the stock. You can see IV percentile at only the 10th percentile, which means over the past year, IV hasn't been this cheap 90% of the time. So certainly getting very inexpensive. You can see on a generalized basis, IV, right, under 20 for the first time in the past 20 days. Certainly prices on the options getting cheap. We prefer cheaper options to buy or go long spreads, right, versus more expensive. Also, lows in implied volatility many times signal short-term tops simply because the market may be getting a little too complacent. Here it was from yesterday to today. You can see IV generally dropping, certainly on the shorter end. And I pulled off, this is the 60-day, which is kind of the, if you will, January-ish IV here on the put side, right? And we can see put IV at the lowest level over the past 6 months. So we're buying the cheapest options over the past 6 months by buying this put spread, right, on a very expensive, in fact, the most expensive Apple's been on a price to sales basis, and basically the most expensive it's been on a PE basis, and certainly on an overbought and overloved Apple stock. So that sets up ideally, as we said, for this sort of put calendar spread trade. We always like to take a look at some comparatives here, right? So here is Apple versus the S&P 500. You can see that every time Apple, which is in black here, gets out ahead of the S&P, and Apple is now, believe it or not, the second biggest stock again in the S&P, over 4 trillion market cap, and might, as we'll take a look in a second, hit number one here fairly soon. which has been a death knell, right, for Nvidia, for Microsoft. So anytime you hit number one, seems to be the time you want to be selling it, not buying it, right? But you can see when Apple gets well ahead of the S&P, almost invariably leads to a pullback, right, towards the S&P 500. We are now at 40% over the past 5 years, higher again. Previous times it even approached this premium, right, did lead to these pullbacks and short-term tops in Apple, right? Seasonality also points towards Apple entering the toughest seasonal time period, right? Over the past 20 years, December has been basically flat for Apple. January, the only negative month, basically outside of September, briefly or minorly negative. So January by far the worst month over the past 20 years for Apple. So entering a seasonally bearish period, which sets up for that put calendar spread trade, which would be buying slightly on the puts in January, selling the December simply because December may languish here, save some time premium, lower that theta, right? And you can see I pulled this off from just a second ago. Apple on the doorstep of becoming the number one stock in the S&P 500. Remember, Nvidia led by a large margin. Apple was actually number three behind Microsoft, well under 4 trillion market cap. Now it's well over. And if it continues and Nvidia continues to drop, we'll probably see Apple take the lead again. So again, this sets up ideally for that, put spread that we like to take advantage of, right, in Apple, to simply play for a pullback somewhere along the way. And what I would look at probably doing is just going out, selling these December 80 calls, right, and then buying the longer term January traditional 80 calls, or 280 puts, excuse me, and paying about 270 or so for it right now. Certainly you can be patient. I think somewhere around 260 makes sense, but you're able to buy the cheapest IV we have seen in a very long time in Apple, right, on a stock that is the most highly valued it basically has ever been on a price to sales and price to earnings basis. Overbought technically, ahead of the S&P 500 to a large extreme, which has never led to good things either. So that's what we like to look at here at Option Optics, taking a look at how to take advantage of a multitude of things here. And it doesn't mean, of course, that this will be a winning trade at all, right? Because trading, as we know, is all about probability, not certainty. So position size accordingly. So until next time, as always, here's